Hello guys, for those of you signing into this channel for the first time, this is Sambuin Forex, Sambuin Forex. In this today's video, I'm going to be documenting the ultimate trading skill strategy. And in this video, for those of you who doesn't know, at the end of the video, you guys are going to be trading like the big banks, you guys are going to be trading like institutional traders. So what are we going to be doing today? We are going to be trading key trading strategy. We are going to be seeing what are key levels, how do we trade key levels, and the different types of key levels. And at the end, I will rank up with tips on key levels. So before we progress, you have 5 seconds to hit the subscribe button so you will not miss my upcoming videos. So you have just 5 seconds to do that. Let's go. 1, 2, 3, 4, 5. All right, let's move to real business. So what are key levels? Key levels are historical price levels. Their prices, their point where events keep repeating. They are psychological price levels where traders do make profit around those particular key levels. So, in a simple notion, we will say that key levels are market price sentiments, and at these particular points, event always up happens. So, at key levels, we may have resistance, we may have support, and at this particular point, that's where forex traders, the real tycoon of forex traders, do make they make use of this particular trading strategy to place their trade. So for now, let's get to see the various types of key levels. Normally, there are just many different types of key levels. I hope you understand. We have the three main key levels, we have the horizontal key levels, we have the slanting key levels, and we have the rounded key levels. Now, begin with the horizontal key levels. The horizontal key levels are always occurring on the higher time frames. When I talk of the higher time frames, I am talking of the 1 month time frame. I am talking of the weekly time frame on the weekly chart or on the monthly chart. So the horizontal key levels are going to be seen on the monthly time frame and on the weekly time frame. How you understand? So what you do is that you are going to be seeing patterns of prime markets that are always in accord at the same levels in the weekly time frame or in the monthly time frame. And those particular key levels are always resistance and support. So how do traders make use of these opportunities? It is simple. At when we're talking of resistance, when the key level is our resistance, it means that when the price reaches that resistance, traders will be looking more of a buying, more of a selling opportunities. Yeah, they'll be going short. I hope you understand. And if the key level is towards a support, it means that when the market reaches at that particular support level, traders are going to be looking of a buy, or they will be looking of how to go long. I hope you understand. I hope you understand. All right. The second category of key levels are what we do talk of the slanting key levels. The slanting key levels mostly occurs on the lower time frame. They mostly occur on lower time frame. It can be on a daily time frame. It can be on the 4 hour time frame, and some people go as far to do on the 1 hour time frame, on the 30-minute time frame. But that I will not advise you. As far as you are a forex trader, always focus your trading strategy, their key levels on the 4 hour time frame and on the daily time frame if you are going into for the slanting key levels. How do you understand? So one thing you have to record here is that the higher time frame, monthly time frame, and the weekly time frame are for the horizontal key levels, and the slanting key levels are for the daily and the 4 hour time frame. Anything less than that is gambling. How do you understand? So at this particular point of slanting key levels, it can be slanting up. The pattern can be slanting uptrend, as well as the market can be slanting downtrend. Now, for which the market is slanting uptrend, it means that when the key level is being attained, we are going to be looking of a shorting opportunity. When the resistance, because when it's slanting up, it means that it's going to attain a particular resistance level, another particular point, we are going to be looking on how to go short. You understand? But now, if the market price is slanting towards a key level on a downtrend, It means that when the market price reaches that particular downtrend at a support level, we are going to looking on a go long opportunity. I hope you understand. Do not make this concept together. I'm going. These are very expensive documentation. You won't get anywhere. I hope you understand. Now, talking of the next category of the rounded key levels, or before I come to the rounded key levels, what I want to do is that what I want to understand is that big banks and institutional traders always place their key levels on the monthly time frame and the higher time frame. How do you understand? That's why the market, that's why it's good to trade the market with higher time frame, because it is based on those higher time frame that let me say small trader, let me not say small trader, minor traders also make kind of money. I hope you understand, because what actually moves the market, it is their big banks, the institutional traders, is not those retail traders. They are big banks. Big banks are the one that actually move the market, and they focus their key levels on the uh, monthly, on the weekly time frame. I hope you understand. Boom. In that same light, let's talk about the rounded key levels. The rounded key levels are key levels that is at least divisible by 100. I hope you understand. So generally, to characterize these key levels, they always have values. They always have two or more zeros. For instance, let's say you have the market price of 1999. I hope you understand. It's not a rounded figure. But now, if you have a market price of 2000, you see, you have a more rounded figure than a 1999, but you have 2000. That's a rounded figure. I hope you understand. So traders will prefer to place their trade on a rounded figure rather than a figure which is lesser. For instance, if I am placing my trade at a figure about 100, it's the same as I'm placing on my trade about 99.9. I hope you understand. It means that I actually bought something at 100 price, which some people may say it is at 99.9. I hope you understand. So rounded figures are also regarded as key levels because information and events keep repeating at that particular point. You can have, for instance, 1900. You can have, for instance, 1800. You can have 1700. You can have 1600. Those are key levels. As far they have two or more zeros, those are rounded key levels, and particular events will be happening at that particular point. I hope you understand. If you have not subscribed at this point, I don't know why. It means you don't want to keep beginning this kind of expensive documentations. So, how do we trade key levels? How do we trade key levels? There are basically three main important ways in which we can trade key levels. The first way in which we can trade key levels is uh, approach to key levels. You understand? I'm going to take a first example for resistance, and I'm going to take a second example for support. Now, if the key market price is approaching, for instance, a resistance, it means that at that particular point, the market is going to rebound. I hope you understand. Since the market is approaching a resistance, it means at that particular point, when the resistance will be attained, I'll be looking more on a shorting opportunity. I hope you understand. Now, if the market is not approaching, for instance, a support, it means that at that particular point where a support will be finally attained, I'll be looking on how to go long. That's how we place. That's how we do. That's how the strategy is all about. I hope you understand. That's how the strategy is all about. When it's approaching the key level, you look for trading opportunities. If the resistance, you are going in for a shorting opportunity, and if it's toward, for instance, a support level, you'll be looking for a go long opportunity. How you understand? So that's where traders always place their information, because informations are crowded more at a particular key level. Without wasting of time, the second aspect in which we can trade key levels is the rebounds. Is the rebounds. I hope you understand. Is the rebounds. The market price can go at a particular point and it rebounds. It can go to a support and rebounds. It can go to a resistance and rebounds. So you take advantage of that level. Yeah, would that cancel what I said, which was more like a rebound strategy, or is a rebound opportunity? Let me tell you more on the approaching strategy as well. As far as you already understand a key level, when the market price is moving to that particular key level, see it's approaching that key level, it means that as the market keep going to that direction, you are going to be looking, let's say for instance, if it was uptrend moving to a resistance, it means that you are going to be looking for a buying opportunity. That's approaching key level. You are approaching a resistance. You understand? It means that you'll be looking for a go long opportunity because the market is uptrend. It's approaching a resistance. You'll be looking more of a buying opportunity or to go long opportunity. I hope you understand. It means that you can look your time frame of your key level with a higher time frame, and now you come to lower time frame and start looking up you start looking for trade opportunities. Since you already marked that the approach level on the uptrend on the higher time frame was approaching towards a resistance, it means that the market is uptrend. So what you're going to do is that you are going to come down to the lower time frame and start looking up a buying opportunities. I hope you understand. Now, if the market is approaching a support, what you are going to be doing is that as the market is approaching a support, you are going seeing it is up, it's downtrend, it's approaching a support. It means that you now look the key level when you already obtain a key level on a higher time frame. You now the weekly time frame in particular, you can now come to a lower time frame, 1 hour time frame and 4 hour time frame, and start looking up a selling opportunity because the market is downtrend. I hope you understand. That's what it means by the approaching key level. The one I first explained earlier was the rebound. The rebound. There was the rebound. Let me just take it all over again. For the rebounds, it means that if the market is moving towards a resistance, when the market reaches a particular point, it can rebound. You understand? It can reverse. Once it reverses, you then start to looking for opportunities in the reverse direction. Remember, the market was going up, right? The market was going up to a resistance. When that particular point will be attained, it means that the market has reversed. The market has rebounded. So you will start looking for a selling opportunity. And in the same light, if the market was moving downtrend, it means that the market was going towards a support. And when it reaches that support level, the market rebounds and you start looking for a buy opportunity or to go long opportunities. That is what it means to trade key level by a rebound opportunity. And the first approach that I explained, which is the approaching key level strategy. How you understand? So the next category on how you can trade key levels is when there is a breakout. I hope you understand. When there's a breakout, normally you will wondering that I talk of price key level, price where historical events occur, price psychological price sentiments. You will be asking yourself, at this particular point forever fixed? I will tell you no, they don't last forever. I hope you understand. They don't last forever. There are times where the market can come to that particular key level and the market is not respected. I hope you understand. The market may not be respected at that particular key level. What it can do is that it can break that key level and continue. And when this occurs, what you have to understand is that that particular key level may never be retested again. It may never gain its strength again. As the market breaks, it continues. For example, if the market was uptrend and the key level, that particular key level was a resistance. For instance, normally we expect that the market to come at that resistance level and rebound back again, but that wouldn't be a strategy. The strategy here is that when it reaches that resistance level, the market continue breaking out and continue being uptrend. That is what it means by a breakout. In that aspect, what you have to do is that you are going to start looking for, you are going to continue looking at an opportunity in the uptrend. Since the market was approaching a resistance level, you are going to be looking for a buying opportunities in the uptrend direction. But now, one thing I will advise you is that do not trade for the first breakout. Wait, be patient. Let the strategy repeat at least twice, 3 times before you know that at least a breakout has occurred. Because if you try, the market may never retest again. If you place a trade in the reverse direction, the market may never retest again, and that will be all. Remember, you took a lot of risks, and at the end, you lose everything. How do you understand? Now, if the market was coming, for instance, we'll see the breakout strategy. If the market is coming, for instance, to the support level, and we know at the support level, we are expecting that the market may rebound at that support level. But since there will be a breakout, when the market comes to that support level, instead for the market to rebound, it will not rebound again. The market will continue going downtrend. You say the market has undergone a breakout. You understand? In that aspect, you are not going to place a trade in the reverse direction. That means you're not going to place a buy in the reverse direction, but you keep going short. you keep selling, you keep shorting. How you understand? Because the market has continued going downtrend. How you understand? So key levels are levels that can also change. They don't last forever. How you understand? We are going to end this session by I'll give you some few tips on how to trade key levels. We have no time for the purpose of not making this video so long. Sorry, I had to say everything in this video for you to understand and master everything until like the big boys, until like the big banks, and be like the market movers. That's why I took a lot of time to explain everything in details. So I'm sharing just two tips on how you can trade key levels. The first tip is that always trade, always use higher time frame to establish your key levels. Always use the higher time frame. When I do talk about the higher time frame, I am talking of the monthly time frame, I am talking of the weekly time frame. Always use that time frame to establish your key levels. Now, again, between the monthly time frame and the weekly time frame, I will advise you again to take the monthly time frame for direction and always establish your key levels on the weekly time frame. Reason why I'm insisting on the weekly time frame is that most big banks and institutional traders, they do and institutional traders, which are the market movers, they place their trade on the weekly time frame. I hope you understand. They don't place their trade on the weekly time frame. They place their key levels on the weekly time frame. I hope you understand. So if they understand, for instance, and fix and come out with a particular key level on a weekly time frame, I hope you understand. After determining direction with the monthly time frame, for instance, if the key level was, for instance, showing an uptrend, it means that after establishing that key level on a monthly time frame going uptrend, they are going to come down to lower time frame or 4-hour time frame and 1-hour time frame, and they'll be looking for a buying opportunity. I hope you understand. Reason because the market is going uptrend. But now, if they establish their key levels on a weekly time frame and discover after analyzing the direction on a monthly time frame, they can now come on a 4-hour time frame and a 1-hour time frame, and then they now look for a selling opportunity because the market is downtrend. I'm talking of this key levels, and you think that it's so difficult. It's not difficult. I take just 5 seconds to do all this. 5 minutes. I can take 5 minutes to look at those key levels, take a currency pair, and this one. And in this video, let me even tell you something. I have analyzed gold. And my predictions for gold. This gold, many people say, you cannot buy gold now, you cannot buy gold now, you cannot sell gold now. Yeah, I know you cannot buy gold now, but I've already predicted for gold using the weekly time frame. Gold actually is at 1934, right? The actual price is 1934. Gold is going to hit 2,000 before it can start going downtrend. Is my prediction. The same strategy for GBP, the British pound, right? The British pound will not decrease now. Will not start going downtrend now. There are predictions. I have predicted that. I have told the market. For now, the Great British pound is going to at least test. Uh, Actually, now it's 1,000. It's 1,300 and something, 200 and something. It's going to take at least 1,300 before from there any other thing can happens. So when the Great British pound reaches 1,300, the market price when the market price 1,300, from there I can see what will happen to the British pound again, because now it will continue to be in uptrend. A lot of these people say they cannot trade Great British pound. A lot of people who say they cannot trade gold. Those are tips I don't want to tell you, but I have no choice. I'll be uploading a live video where I'll be explaining chart on the I'll be explaining chart with I'll be explaining this with chat. So stay tuned for my upcoming videos. But before then, the last aspect is that when trading key levels, always use great always use your stop loss wisely. The stop loss must be wisely. Do not go and insert a stop loss where you are the center. No, always go to the key levels. I don't know what you may be escape or whatsoever. Always go to the key level and establish why stop loss. Why stop loss? The stop loss should be around the cluster of the key levels. It should not be in the middle of the section. How you understand? So If this has been interesting to you, you can hit the subscribe button. And before then, on Telegram, I am Sambuin Forex. I will leave a link in the description for you so you can join my Telegram community. And also, I will drop a link to the broker I use. For instance, if you are in need of any broker, I will drop a link in the comment section. Just check the link in the description section, and I will give it to you. See you. I love you. Be a profitable. Continue to be a profitable trader. Peace out.